00. I spent 14 years inside one of China's biggest banks. I started as a credit analyst, and I ended up as a vice president running a corporate banking branch. Along the way, I approved and managed more than 10 billion yuan in loans. Today, I want to tell you what I learned, not the official version, but the real version. Before I begin, let me explain why I can speak about this with confidence. I spent 5 years at Shanghai Pudong Development Bank, then briefly joined Suning Bank, and later spent 7 years at Bank of Shanghai. My final role was vice president of the corporate banking department at a flagship branch in Nanjing. During those years, I worked on loans for subway construction, pharmaceutical companies, shipping businesses, real estate developers, and local infrastructure platforms. I handled cross-border financing of $30 million US, private placement bonds, syndicated loans, and complex credit structures that most people outside banking never see. 059. So, when I talk about how Chinese banking really works, I am not reading this from a textbook. I lived it. Lesson 1. Relationships are more important than financial statements. In Chinese banking, numbers matter. Revenue, collateral, cash flow, debt ratios, and repayment history all matter. But they are not enough. The most important question is often this: does the bank trust you? Many foreign companies misunderstand this. They come to China with polished financial reports and assume that if the numbers look good, financing should be simple. But in reality, a bank manager also wants to understand the people behind the company, the local government relationship, the business reputation, and whether the borrower will still pick up the phone when things become difficult. In China, trust is not a soft factor. Trust is part of the credit structure. Lesson 2. Policy is more powerful than profit. 155. A bank is a commercial institution, but in China it is also part of the policy transmission system. From 2020 to 2021, banks were encouraged to lend aggressively to small and medium-sized enterprises. The policy goal was clear: support the economy, stabilize employment, and keep businesses alive. Then, when the real estate market cooled in 2022, the attitude changed quickly. Credit standards tightened, risk appetite fell. Projects that looked acceptable one year could become almost impossible the next year. If you understand this, you understand 50% of how Chinese banking works. The question is not only whether a deal is profitable, the question is whether the deal fits the direction of policy at that moment. Lesson 3. The real value of a banker is building bridges. A good Chinese banker is not just someone who says yes or no. The real job is to find a way to make the deal work. One example was Jinda Semiconductor, YEP's 253. It was a pre-IPO company, still high risk but strategically important. The company needed a 1.5 billion yuan fixed asset loan. A simple credit model would have said the risk was too high. But by understanding the industry, the local government support, the company's future capital market plan, and the structure of the assets, we found a workable solution. Another example was Suqian Water Group. We helped design a 1 billion yuan private placement bond. It became a regional benchmark transaction, not because the deal was easy, but because it connected the needs of the enterprise, the requirements of investors, and the risk control standards of the bank. That is what a banker really does. You stand between capital, policy, risk, and growth. Your job is to build the bridge. Lesson 4. The industry is changing faster than most people realize. When I started, many processes were still paper-based. Credit files were thick. Approvals moved slowly. 352 relationship managers carried documents from one department to another. Today, the industry is moving toward AI credit scoring, digital lending platforms, automated risk monitoring, and data-driven customer acquisition. The biggest competitors are no longer only other banks. They are fintech companies like Ant Group and WeBank. But here's the interesting part. The tools are changing, but the core principles are not. Trust still matters. Policy still matters. Risk judgment still matters. And the ability to connect people, capital, and institutions still matters. So, after 14 years in Chinese banking, these are the 4 lessons I would leave you with. First, relationships are part of credit. Second, policy can change the direction of money faster than profit alone. Third, A banker's real value is creating workable structures. And fourth, technology will transform the industry, but it will not replace judgment. If you want to understand China, do not only look at headlines. 454. Look at how money moves. Look at who gets credit, who does not, and why. If you found this useful, subscribe to this channel and turn on the notification bell. In the next video, I will explain why many foreign companies fail when they try to get financing from Chinese banks, and what they should do differently.